Welcome to Planning with Purpose. I am your host, the Dean Erskine, CFP. Today, we're covering a simple year-end financial checklist to help you finish strong and start next year on the right foot. Jimmy Carter once said, "If it were not for the last minute, nothing would get done." And honestly, year-end planning feels exactly like that. So let's make the last minute work for you. Let's start with required minimum distributions. If you are age 73 or older, or if you inherited an IRA, you may have an RMD due by December 31st. Missing it creates penalties. So this is one item you do not want to overlook. If you do not need the income, you may have the option to send your RMD directly to a qualified charity. This is called a qualified charitable distribution. It can satisfy the requirement and reduce your taxable income. And it's just a good thing to do. Next, let's talk about tax loss harvesting. This is one of my favorite subjects, and remember that it only applies to taxable investment accounts. When you harvest losses, you can use them to offset capital gains, now or in the future. Without harvested losses, you are limited to offsetting only $3,000 of ordinary income per year. Harvesting losses gives you more room to manage gains intentionally. Just remember the wash sale rule. If you rebuy the same or similar investment within 30 days, the IRS can disallow the loss. Now, let's look at your retirement accounts. Have you contributed everything you intended to your 401k or any one of these plans? You can still make changes before year end to increase your contribution. Small adjustments now can make a big difference in the long term. If your employer offers a Roth option, this is also a good time to look at how you want to split your pre-tax and Roth contributions. Next up, flexible spending accounts. FSAs are often use it or lose it. Check your employer rules to see whether you have a grace period or a carryover option. If not, this is the time to schedule appointments, order glasses, or restock on eligible medical items so you do not leave money on the table. And finally, charitable giving and family gifting. For charities, this is the last opportunity to make donations that count towards this year's taxes. For family gifting, the annual exclusion this year is $19,000 per person. This is optional, not required, but useful if you plan your gifting intentionally. Give because it aligns with your values. The tax benefit is simply a bonus. Year-end doesn't have to feel stressful. A few intentional steps now can save you time, taxes, and unnecessary headaches later. If you want help reviewing your year-end checklist, my contact information is in the description. I am the Dean Erskine. Thank you for joining me, and I will see you in the next episode of Planning with Purpose. Remember to plan with purpose, grow with grace.